Now, let me get to a Dow component that is one of the original Dow Jones Industrial stocks from many decades ago, widely held, General Electric. It is up nearly 4% after it just announced this morning that its chief executive officer, Jeff Immelt, who started in 2001, is stepping down from his post after that 16-year reign. Now, we want to show you how GE has performed since Immelt was named CEO on September 7th, back in 2001. Of course, that was just days after 9/11. I remember it well. I was working for a GE company at the time. He was handed a very, very tough deal to turn this company around after 9/11. The stock went from $40 to what we see today, which is about $27 and change. Now, you heard it right here on Fox Business First weeks ago when Charlie Gasparino broke the news that Immelt was feeling pressure from Nelson Peltz, one of GE's top activist investors, that Immelt would retire. Charlie, I remember when you broke that story and everybody said, nah, he's lasted this long, but it appears you were very much correct. What is really behind what got him out?
Yeah, I mean, what we said is this, that his job was in jeopardy and that Peltz was likely to make a move. He owns less than, I believe, 1% of GE. As you know, GE is a huge, widely held stock. Once was one of the biggest Dow components. I mean, it's overtaken now by, or one of the biggest market cap companies in America, but now overtaken by Apple and Facebook probably and Google. But it's still a major player, and he was feeling the heat from Peltz. And why was he feeling the heat? Well, it's interesting. It's not just that he was, the stock is well below from where he took it over. It was that in the past year, according to Peltz, Peltz would tell you, if he was on the show, that Jeff Immelt failed to meet certain benchmarks that Trian, that's the hedge fund that Peltz runs, the activist hedge fund, set out. And they were pretty simple benchmarks, including cutting costs a certain amount and making certain earnings targets. And he didn't do it. And, if you have a stock that's perennially underperforming, which I guess you could say that about GE, even though it's a tough company to run, and you don't meet those sort of targets, and you got an activist breathing down your throat, well, guess what? Your chances are that you're going to be pushed out. Now, we should point out that Jeff Immelt, if you got a shorter term stock chart, say you did a year to data there, you will see something kind of interesting. The last time the stock went up like this was when we reported that that Peltz was putting on the pressure. So, Wall Street, even though CNBC couldn't follow us, couldn't match our reporting, and some other financial news outlets, Wall Street, yeah, there we go. You can see that little pop around March. Wall Street believed us, and what they were saying was it's better with him out. And here's something else, and I think this is kind of, Jeff Immelt's a decent guy and a very good manager. It was probably time for him to go. But here's what Jeff Immelt wanted to do. He wanted to leave when he gets the stock up to 40. That was a personal goal. That's why he was asking the board to keep him on for a while. Obviously, it didn't look like it was right. Going that way, and so not just did he not fulfill his dream to do that, he actually was shown the door earlier than I think most people thought.
I have a question, Charlie. Yeah. There was also that big discussion about buying assets and acquiring assets at too high a price and then selling at precisely the incorrect time. Yeah. The NBC Universal deal he sold, and I believe the cash pile that NBC had at the time was more than what it got sold for. GE Capital as well, and then of course Baker Hughes, the merger in the oil services division. So some judgments were made here that I can't say he was entirely to blame, but.
Yeah, listen, I mean, we get paid to Monday morning quarterback. I'm sure if Jeff Immelt was here, he'd defend himself and have a rational explanation for that. Listen, his explanation would be, I wanted to take GE down to a core type of business. We didn't want to be in these extraneous businesses. We want to be in healthcare, we want to be in some tech, maybe a few other things. But we don't want to be in TV. Entertainment. We don't necessarily want to be...
They don't want to be in light bulbs? I mean, that was their original...
Yeah, but maybe they don't see... Well, light bulbs, it's interesting. Is that the future of GE? Probably not. And we don't want to be in the financial rolling of the dice business. Okay. He will say that, he got out when he could get out. Now, obviously, on the Monday morning quarterbacking, everybody's going to, draw, say, okay, look at the timing here. It was horrible. But I will say this. The reason why he's out is less because of that and it's more because, he didn't meet some pretty simple benchmarks that Trian put out there, including cutting costs. And that was it.
Yeah.
And Nelson Peltz would have made a very, very, very coherent argument why he should leave if he didn't step down right now.
Apparently, we just get the headline at the moment that the Baker Hughes deal has just gone through. GE has won the U.S. antitrust approval for the Baker Hughes purchase. Right now, GE's up about $3.83, so we're looking at a gain of 1%. Had been up more than $4 earlier. Charlie, thank you.